Are you one of the many busy professionals working in offices day in and day out? Do you wonder how some people grow their wealth fast, retire early, and play on workdays? Well, you're in luck, because Ginny Bolling hosts this show, Pivot to Prosperity, where she interviews people that can do just that. Play on workdays. Many guests have become financially free. She also interviews people that are on their journey and people that are in support roles, like attorneys, contractors, brokers, and others. Commercial real estate is the common element. She is on a mission to be sure busy professionals know they can own substantial commercial properties too, like apartments, self-storage facilities, and others, and not have to do the work managing them. Passive investing is the key. Syndications are the typical method. Tax write-offs are some of the biggest rewards. Ginny and partners find the deals, build a strong team and business plan, then offer the investment opportunities to passive investors. New episodes are released every Tuesday at 12, so watch for new releases. If you want to get involved, let us know. You need to get pre-qualified to hear about most deals. See the show notes for contact information.
Hello, hello. Ginny Bolling here with Pivot to Prosperity, brought to you by Pivotal Real Estate Investments, where we help investors build wealth and income through commercial real estate that also improves communities. And today we have Dan Wilson with us. Dan, thank you for coming on.
Absolutely. Thanks for having me.
Well, this is a treat because you and I had not met before, and we chatted a little bit just now, but you are a local agent in the real estate world, and you are not dabbling, you're serious about a lot of good. You tell your background, because I love your background. Go ahead.
No, I appreciate that. Thanks for having me. Current kind of day role is a commercial real estate advisor, doing some sales and leasing, primarily in the land and industrial space. That kind of keeps me in the market to look for opportunities to participate, to connect the dots with some of the institutional investors that I've gotten to know over the years. So part of the background there is pretty deep on the investment side. So I've actually been an investor in the equity markets since I was 13 years old. So for a few decades, but been for a large public pension fund in the real estate and alternative assets area. So, got to know some of the best money managers on the planet, and, just try to foster those relationships and kind of learn, how they evaluate markets and things like that. So, really trying to bring a deeper investment background into, today's commercial real estate environment.
Awesome. Yes. We didn't even talk about that part. That's awesome. It really is. You
Yeah.
started at 13. How much was your
13.
first investment?
So $5,000. Funny story. I just expressed an interest as I guess a middle schooler at that time, and my grandmother, she was actually a part owner in a Coca-Cola bottling company in Minden, Louisiana, the Castle family. So rest her soul. But so anyway, she noticed my interest in I'd check stocks every day and kind of see, just this wealth creation was interesting, right? Where you look at the paper, which dates me quite a bit, but, you see IBM was up 2 points or this, and it just was fascinating how these stocks go up and down, and kind of, wealth is created from that. So she basically said, look, here's $5,000. You can't go, buy video games or clothing or what have you. You have to invest it. So I worked with her family investment advisor, and bought Nike, which Nike shoes, everyone knows Nike today, but at the time, that's what I had, and that's what all the kids liked. And a baseball card company. So invested it, and, worked with the advisor, and kind of just learned a little bit about, the equity markets at a young age. And ultimately, sold some of that off to, for a down payment on a first home a little later on after college. So kind of a neat story to get, acquainted with, equities in the stock market.
So I bet Nike went up a lot.
They did over the time. Yeah. I mean, it was, Michael
What
Jordan
was your
era.
return? Do you know?
Oh,
3,000%?
it probably at least doubled, maybe tripled by the time I actually sold it. So again, I didn't do a lot of trading with it. It was kind of a buy and hold, but, so from 13 to early 20s, to be able to, pay for, down payment on a first home, it did what it was supposed to do. So did pretty well.
That's great. That is. All right. And so you also talk some more about where you've worked.
Yeah, so so with that interest, kind of had a laser vision to be a stockbroker or a financial advisor right out of school. So did that for a period of time, which allowed me to again learn kind of the markets, fixed income, equity markets as well, mutual funds, things like that. So different asset classes, and then while I was there, one pivotal person as part of
Ding,
my
ding, ding.
life. Yeah, was my manager. His name was Ben Brooks. So this goes back a few years, but great mentor. Just taught me everything. Answered every question. Door was always open. So we did private placements for private companies. So started to learn a little bit more about capital raising, structuring things, from what you do in the syndication world today. Just learned a lot that way. So definitely shout out.
What years was that? Do you remember?
That was 98 to 01.
I
So
wish I'd have started then. Oh my goodness.
dot com bubble, all that. People were, stocks were trading with no revenue, let alone earnings. It's how many eyeballs they had at, thisrock.com or whatever the silliness was back in the day.
Wow.
But it led the way. I learned a lot. I was able to then go to work for the state of North Carolina, which is one of the largest public pension funds at the time. We were about a $60 billion fund with 12 people, and kind of allocating that capital towards money managers. So I look back, one of the greatest experiences of my life to be able to, we had a blank check, right? We could put up to 5% in hedge funds, private equity funds, venture capital funds, and then 10% into real estate. So we had a $6 billion equity check for real estate managers, which you know, it's interesting the years I kind of remember it like it was yesterday, but just in talking. So I did not only manage your due diligence, but also reporting. So every quarter, I was fortunate enough and blessed enough to have conversations with just the best of the best at Deutsche Bank and Prudential and the Black Rocks of the time, those types of firms, and just hear how they're analyzing the current market. Why one manager is writing up a hotel in New Orleans, and another one is either keeping it flat or writing it down. So it just was interesting to kind of see those flows of, really how the big institutional investors drive a lot of what you see today, especially at a property, and an asset level as well. Um,
Yeah.
so yeah, I mean, I don't want to spend too much time on the kind of the varied past, but did that, then went moved back to Florida, worked for a design build firm. So that was again kind of a great experience to see how commercial real estate is built, how it's designed, how it's shredded to kind of put it together to meet the needs of either an owner or the market in a speculative manner. Then worked for the railroad. So I spent some time at CSX in their intermodal marketing group. So, it just was, again, kind of a great learning experience, which parlays into, some of the industrial work that I do today to understand, logistics and truly kind of how goods, end up here, on our shores and in our big box stores, and on the shelves and things like that. So,
Yeah.
pretty,
Fits
pretty,
together
pretty cool
well.
experience. And now I'm a commercial real estate advisor. Uh,
Sounds like the perfect title for you because you've been in so many positions too, you know?
I think so, right? I mean, I think my kind of thought process is, how can I add value, right? So whatever the client need is, and again, it could be buy side, it could be sell side, it could be a leasing engagement, that sort of thing. So, what are they trying to do, and how can I, maybe add some additional value beyond the transaction, right? So, am I helping solve their true need? At the end of the day, yeah, there's investors in there, they've got a yield or return metrics they want to get, but there's also owner operators, right? Where the real estate is a piece of their, income statement, but it's really more about growing their business. So I try to almost put the consultant hat on, and just kind of help, in any way I can, whether it's introductions or, hey, have you thought about it this way? That sort of thing.
You don't have to answer this. Do you prefer to work with a owner occupant situation or because of your logistics and all that background? Oh, I guess it
Hmm.
works for both ways. or a bunch of investors?
That's a great question. I say it depends. I think
Fair enough.
I have noticed, investors, institutional investors, it's, and we saw it on the LP side, right? So we were a very large LP, and we would invest in limited partnerships and structures like that, and our managers, we want them to put the money to work and get it working and working on our behalf in a passive manner, which I know again is kind of the whole pivot philosophy, right? But so they felt that pressure, but we also don't want them doing bad deals, right? So
Right.
I think there's that kind of yin and yang balance of we want you to put the money at work. We're not going to let you call it down and put it in treasuries or keep it in the bank, but we don't also want you doing a lot of bad deals. So I think there's that element where sometimes those investors can be choosy, and they should be, right? They've got their buy bucket and their buy box, and it needs to kind of fit neatly in there. So, the hit rate on some of that can be, quite low. You show someone 10, 20, 30, 40 potential opportunities. And the best answer for me on the brokerage side is a quick no, right? Not a, well, okay, let's hem and haw around it for 2 months and then the opportunity's gone. Flip side, to the owner operator, if there's a sense of urgency, right? I mean, those can be the best clients, right? They have a need. They're outgrowing their 20,000 square foot space and they need 40,000, they need 50,000. So they're not about, taking a year or two to kind of figure it out, and it's got to be perfect and it's got to be on a signalized intersection and all that sort of thing. So those are the best, is if there's a kind of true sense of urgency to move and let's solve your problem and get going.
That makes sense. That does. And insofar as when you're in that idle time, because we know it's been a tough market here lately,
Hmm.
I'm going to ask where first you as a pension advisor would
Hmm.
be placing money to kind of hang out for a bit. And I'm in the back of my mind, I'll full disclosure, I'm thinking I never really looked at insurance
Hmm.
vehicles before, but now I've got
Okay.
this whole new awareness going on, and I'm suspecting you're going to say that, but I don't know. Did they invest in anything like that when they were waiting?
Not really. I mean, it was pretty basic. North Carolina was very risk averse. So we had over half our portfolio at the time was in fixed income products. So a lot of government bonds, corporates, munis, things like that. So very risk averse, which I do think is a pretty prudent place to park money today. So, again, you look at money markets and treasuries at floating here at 4.5. Certainly that's a lot better than what it was, virtually zero a couple of years ago, right? So I think there's some opportunities that way if you're going to park capital. And there's some interesting stuff I'm starting to look into recently. I had lunch with an acquisitions director at a local retail REIT, a publicly traded REIT, and he was remarking that basically the net asset value of the underlying property that some of these REITs own, and you could pick an asset class, whether it's retail, industrial, something like that, but especially retail. The stocks have been hit hard. They're down. They're off, 20, 30, 40% from a, market cap standpoint, but the NAV of the underlying is still pretty strong, right? So I'm starting to kind of look at some of those where maybe you can have confidence that you get a good dividend, right? So you get a dividend yield. Obviously, you need to kind of understand the portfolio, where they're at, and what risks there are. I mean, if it had heavy big city office exposure, then yeah, I'd probably steer clear of that sort of thing.
Right.
But if you could understand where they're at, if it's well located retail and kind of supply constrained markets and things like that, and we can make the argument that it's maybe 20, 30% below true asset value of the assets of the portfolio, and they'll pay you a 4, 5, 6% dividend yield while you wait, and you've got the liquidity of selling their stock as you wish. So those might be some places that you still get some some participation. Again, there's not investment advice,
Right, yeah.
but you're going to get a little bit of money for parking capital.
Right. Um, so I like that, but as far as longer term, I segue into the syndications because you
Mhm.
don't know what the REIT's actually going to buy. That's the
Absolutely,
thing, but
absolutely.
the liquidity is the key from what exactly why you're saying that too.
Yeah,
But
yep.
have you done any infinite banking? Have you done any whole life policy type
I haven't. No, I haven't.
strategies? I'm getting into that, and I'm going to be doing a presentation on it. I don't know why I didn't do it before.
Okay.
It is powerful. I'll tell you more offline, but
Yeah, yeah. Shoot me a link once you get into
I'm
it.
going
I
to go ahead
love.
and get licensed to sell it so that I learn
Okay.
all of the compliance piece because I'm a stickler for knowing all the compliance. And if I go ahead and just get licensed, then I know I'll know it and know where to look it
Yes.
up. So,
Yes.
but yeah, I'll fill you in. But
Yeah.
anyway,
Let me know.
would you like to share a property or two while we're recording?
Yeah, yeah, no, I'd be
Okay,
happy to. Yeah,
yeah,
there's
so we do that.
variety of things I've been working on, but one I think maybe some of your listeners might know, or if they're here in Central Florida, hear about. It's called the Olympus Project. So it's a mixed use project, and I'll share my screen here in just a second. But basically, 240 plus acres out in Lake County, so Claremont area, so Western Orlando for those outside the area. Massive growth. So you think about Orlando kind of sprawling west into an area that actually has hills and topography
Yay.
here in Florida, which is unheard of. So let me share here. Give me 1 second. Pull it up. All right. Can you see this little
It's coming. There we go. Yep.
interactive map?
An
Okay.
epic impact every day in every way.
Yeah, so it's a cool project in a sense, and it's multi-phase, multi, mixed use. But t thinking about health and wellness, so live, work, play, but with a sports component as well. So the play piece is not only yourself going for a run or doing outdoor activities or things like that, but high level venues for soccer, for tennis, for volleyball, for indoor volleyball, an arena, and, amphitheaters and things like that. So it's, some high density, multifamily with a town center feel, mixed in with some retail and things like that. So you can, walk to the coffee shop, go get a smoothie, maybe go to a, pure bar class, that sort of thing. And then you've got a little bit lower density here with David Weekley, doing some single family product there. We've got Integra, which is doing, a very nice 4-story garden apartment type product. They're built almost 100% complete, but very nice community that they built there. So we're, from a listing standpoint, we've got a couple pieces that are now the next phases of finding the right development partners to really take it to the next level. So that's first and foremost would be a mixed use multifamily commercial developer. So it could be, call it 280 plus units with some commercial tied in. It could be horizontal, doesn't necessarily have to be vertically integrated. And then we're also looking for a commercial developer out here, which is kind of the next step. So, whether that's uh, a retail developer that does a lot of grocery anchored centers, whether they do a mix of medical, and traditional, office slash medical office. So it's almost a blank canvas to someone to really kind of have a vision to really activate, all of these different pieces, right across the street from Lake Louisa State Park, which is kind of where we're just south of Claremont, about 3 miles, something like that. And you've got the Wellness Way going right here to our north, which is getting expanded and basically connecting Lake and Orange counties, between Horizon West. So exciting project. Certainly feel free to reach out any questions or if anyone has interest in kind of exploring a little bit further.
What kind of density are you looking at on the 280 unit?
So that's pretty dense. We've got two parcels here. This is about 6 acres, and this is three. We could probably, go a little bit bigger up to maybe 12 acres, but you're, yeah, mid 20s per acre, something like that. So fairly dense. We could go likely up to a 5-story product if someone wanted. Down to three is a little tougher. Just you start to run out of real estate unless you're wanting to do a structured parking type scenario. But we've got it modeled out at a surface park, which is a little bit more economically feasible to today as well. So it's ownership's open. We want to find the right partner that has the vision to not necessarily do a cookie cutter, drop in place. We've done it 20 times over in, other markets, but we want to kind of create, a destination, and kind of tie into, some of the other kind of unique uses and characteristics of the development as well.
That's one of the things that I really kind of encourage with the mixed use. Tavistock does a great job of placemaking.
Hmm.
You're
Hmm.
proud of where you are because everywhere you look, there's placemaking attributes, of the architectural features or
Hmm.
hardscapes. That was a term I really didn't realize what it really was until lately. But yeah, so in this, are you using any kind of, or not you, but is there a modern design element where, for instance, like Baldwin Park or something, you're parking everything in the rear and trying to keep the parking lots more hidden or
Yeah, yeah. There's definitely there's a couple of different layers there. There's a development review board and an architectural review board. So, making sure that it all kind of sticks together. From not only a architectural and design standpoint, but again, kind of the placemaking, right? So, if someone wanted to come in here and say, hey, we're going to do a 20-story tower or something that just isn't going to fit or something that doesn't make sense, then that's certainly not going to be allowed to do that. So it's to your point, like a Baldwin Park, I live here in Lake Nona with Tavistock and witness it every day, and it's that type of feel where they're trying to get this density but smart density, where it's integrated, so you can kind of you maybe have little bit more mid-rise, closer to something that is maybe a 4 or 5-story product. And then you've got the single family where they can get their golf cart or their bike or lime scooter, and then scoot up to get a cup of coffee or have lunch and that sort of thing. So it's very, very thoughtful, but there's still a lot of, flexibility for the right development partner where they can kind of make it their own according to their vision as well.
well, I know a couple of people I should share that with. So after we're done, we'll I'll make sure you
Yeah, let's
got my
talk.
email. Well, super.
Yeah,
I'm glad
yeah,
you shared that. Any other ones
yeah.
that are particularly special that you want to take a moment? We only have a couple minutes left, but
Yeah, no, I would say that's primarily where I've been spending, a fair bit of my time and, just a lot of outreach to, multifamily mixed use developers and commercial developers as well. And, helping them with their underwriting and kind of trying to find the right fit. I would say, any, kind of off market, land sellers, so talking to the farmers and the families that have maybe had some tracts of land here in Central Florida for several generations, and maybe the kids or the family, they just they're not really as interested in pursuing the the farm any longer. That's there's so many development partners that we talk to and that I work with that I'm actually there's a deal here in kind of Lake Nona area as well. We're talking to the family, and it's really important to them to leave a legacy, right? They some just yeah they want to sell and optimize and kind of create that wealth for themselves and their next generation, and that's great. But I think there's also certain families that it's important to see kind of what goes on after the sale, right? So they sell their farm or their 50 acres or 100 acres or more, and yeah, it could make sense for multifamily, it could make sense for a single family development, but some want maybe a little bit more, right? Or maybe they want a little bit more of character and charm, and maybe they've got a pickleball, know uh some courts there to do that, or tennis or, just something like that where it has a little bit more of a legacy element to it as well. So, any of those
Yeah.
folks, that are kind of open, reach out, let's talk.
And so if I'm hearing you right, you're more or you see a lot of desire or request for maybe naming the streets or naming the development after the family, maybe, or is that what you're
Yeah.
talking about? Some legacy
Yeah,
to
yeah,
pass
and
on?
some, I've seen, where it's proposed, again, these are more partnerships, right? So obviously we can transact and sell a tract of land for you. We can certainly do that. Find, top dollar in today's market. That's great. But to the extent the family, wants to kind of stay involved, and we can structure joint ventures, where they maybe aren't driving the bus entirely, but the development partner is, and they can kind of, maybe it's a piece of an open space that has a tribute to the family, and it kind of tells a little bit of the story going back, several generations about how it used to be, an orange grove, or, whatever kind of the story of the legacy. So
Yeah,
elements like that can be kind of integrated, and it's not going to, affect the density and the calcs, and make it, not work. But there's flexibility, I guess is what I'm saying. And a lot
yeah,
of
yeah, that's
developers
nice.
now
Mhm.
are trying to be a little bit more accommodating with landowners today.
Well, and I think it seems like more of them are learning that it's better for them to stay in the deal, let the
Mm-hmm.
pros handle it,
Mm-hmm.
but you end up better if you stay in the deal, and
Right.
especially because of taxes.
Yeah.
So
Yeah.
it seems like more and
Absolutely.
more sellers are starting to participate in
Yeah.
my, but yeah,
Yeah.
which
No,
is great.
it is great. Agreed.
Yeah.
Totally agree.
Right. All right. So we're
Yeah.
at that point. I got to ask you, is there a pivotal person or event that brought you to where you are today or is pushing you towards something?
Yeah, going back, I would have to say, as a young, stockbroker, as they called it back in the day, financial advisor, Ben Brooks was truly instrumental in, really not only learning, the equity markets and kind of how to be a broker and things like that, but really the pivotal change for me was a mindset, right? And seeing, yes, there are transactions, yes, we can, sell stock or mutual funds and things like that. But I think it's also just seeing how wealth is created, and kind of going into that investor and owner mindset, which kind of carries through today with, a lot of what I'm looking to do and participating. I know a lot of what you do on the syndication side and things like that, but just really just, having that curious mindset of, hey, it's not transactional one and done. It's more, how do we invest and put, our dollars into assets, right? That grow, and they're growing, not to use the cliche, but kind of while we sleep, right? So
Yeah.
as they grow, and then they can kind of help our wealth and standard of living, and kind of next generation standard of living kind of grow with it as well. So I would say, Ben was probably the most instrumental in that process.
All right. Well, we will have to take it the next step then. Do you want to, you can reach him? Do you know how to reach him these days?
Yeah, yeah, no, I definitely too.
Okay.
He's still at North Carolina, but yeah, no, definitely get a hold of him, and
Okay.
yeah,
You want to
just a
let him
great
know you
guy.
nominated him or you want me to
I
call him?
will, I will.
Okay.
I'll send him a
All
note, let
right.
him know.
Good, good. And then I can follow up and that'd be perfect. Okay. I'll be a pivotal
Yeah,
person. All right.
absolutely.
Okay. Well, very good. Well, so why don't you let people know how they can reach you?
Yeah, best way I would say is probably LinkedIn. So it's Daniel Wilson is kind of, and just search, and I think it's like Daniel Wilson 7 is that. But yeah, just find me on LinkedIn. Reach out, connect, send me messages. I get them, a lot. Some are great, some are less great, but yeah, reach out, let's talk. I just love, kind of investments and real estate. So happy to kick around ideas if you have certain needs. Happy to try and connect the dots, and just, however I can add value, would love to connect.
Well, and I would say it's in your DNA more than most people if you started at 13. You have that investor mindset to be able to help people to really see the ins and outs, I would say. That's a really cool thing. Yeah.
Yeah,
Um,
well, I appreciate it. Yeah, I try, and And I think partially with seeing different asset classes too. It's interesting how, you would see the way things are done and say, early stage venture capital and how it could apply to, a syndication deal for commercial real estate. It's just interesting how little nuances, can be like, well, have you thought about this, or can you structure it this way? I feel like it gives a little bit more perspective that maybe can add some additional value.
I might ask you to look at my next syndication, actually.
Let's do it. Yeah.
We'll talk. Yeah.
Yeah, absolutely.
All
Happy
right. Well,
to.
thank you. And we're going to put all your contact information in the show notes
Okay.
too, so it'll be
Awesome.
there. But super.
Very
Did I
good.
interrupt you? What did you say?
No, I was just to say, Jenny, thank you very much. This is awesome. It was great getting to know you. I appreciate
Yeah,
the
likewise.
invite.
Good, good.
Yeah.
Well, thank you. Take care.
Thank you. You too.